Welcome back to Wealth-ology. For today's video, we will be going to talk about $1,000 per month in dividend investing and how much money you need to invest. Let's get started. Imagine making an additional $1,000 per month. It's a good sum of money, but the best part is that you won't have to do any more effort to get it. It just deposits itself into your bank accounts on a monthly basis. That is the essence of dividend investing. It's referred to as passive income. You don't have to labor for your money. But how can we get $1,000 per month in passive income from dividends? And regardless of what you say or how high your financial aspirations are, $1,000 is a decent sum of money, especially when it comes without having to do any extra labor. The only effort you have to do today is the first upfront labor of studying dividend investing. So, what dividend approach are we employing? How do we choose the correct businesses? What's more, how can we get started in the first place? You don't have to start earning $1,000 per month right away. You must begin small. You begin rolling that small snowball that fits in your hand at first. However, as you push it down the hill and gain momentum, it grows easier and bigger until it becomes a gigantic snowball that is impossible to stop. You may begin with just a couple of shares, paying $1 or $2 a month, or even quarter. But that $1 or $2 begins to accumulate and expand on its own, and you may use it to purchase additional shares as time goes on, making it easier and larger. So how do we get started? How do we pick those initial great qualities dividend stock to build and grow from? As an example, we'll look at the shares of McDonald's. The projected dividend and payout ratio are the first thing I'd recommend looking at. So what is the future dividend? It refers to the number of dividends you earn each year. $5 in this situation. Yes, it may not appear to be much, but remember the idea we discussed previously. Compound interest works wonders. All you have to do now is to start the snowball rolling. McDonald's has a 2.3% dividend yield because the 4 dividends total $5. That isn't considered awful in today's market. The second item to consider in their wages, as you can see, it's currently $6.33, which implies McDonald's earns $6.33 per share every year and pays out $5.33. They utilize the remaining $1.33 to reinvest and expand their business. You must now ensure that earnings are continuously higher than dividend distributions. You don't want them to pay out more than they earn because that means they'll have to dip into their savings or balance sheets. It's not a positive indicator in general. Another item to look for before making a purchase is the dividend history. Generally speaking, you want a company that you can look back on and observe dividend increases over time. So, looking at McDonald's, it's not awful. They've risen dramatically in the last 12 years or so, from 1.14 to 4.95. One thing to keep an eye on is that they cut their dividend during the last recession, which isn't a good sign. So let's start with the payouts. What kind of dividend yield are we talking about here? Take a look at their dividend history to see how dependable they are. The second step, which many dividend investors overlook, is to assess the company's quality and consider how it will appear in 5 to 10 years' time, and whether it will still have a viable business plan, and they the type of company that outperforms their competitors. In general, you don't want any middle-of-the-pack companies. You want those at the top. Buy companies with a strong competitive advantage, as Warren Buffett advises. The point is, you don't need another $200 to buy McDonald's share and start investing in dividends. You can start modestly with equities such as Bank of America, which cost $25 per share. Coca-Cola, $50 per share, $30 each share for AT&T. There's a plethora of lower-cost equities to begin with and then grow upon. However, you must develop the habit of investing your money rather than squandering it on frivolous purchases. Consider how much money you could save if you didn't buy Starbucks coffee every day. You could make one at home, or think how much money you'd have if you stopped buying stupid items on Amazon or eating avocado on toast. If you think about it, there's a lot of money sitting there that might be invested in dividends instead of being wasted. If you want to achieve your objective of $1,000 in dividends every month, you must change your habits. Instead of thinking of yourself, I can't wait to spend this money, think to yourself, I can't wait to invest it and buy more Disney stock or Pepsi stock or whatever stock you find value in. The investing mindset is vastly different from that of the average person. The average individual gets some type of short-term enjoyment, but the long-term investor can achieve achieve goals like $1,000 in dividends every month. It's a choice between passive income and immediate gratification. Decide which one you want to pursue and then go after it. It is all up to you. But let's get back to our aim of $1,000 in dividends per month. Let me show you some dividend stocks that are good places to start. 3M Company, MMM. A stock with a respectable 3.5% dividend yield, and the thing with 3M is that they've increased their yearly dividend for over 61 years in a row. As a result, it's safe to claim that their dividend is consistent. With a market valuation of around $100 billion, 3M is presently selling for roughly $170 per share. The firm may help you diversify your portfolio by exposing it to a variety of industries, including U.S. healthcare, consumer products, and worker safety. They create about 60,000 distinct products under various trademarks, ensuring a wide range of products. PepsiCo Inc. The dividend yield of this well-known corporation is 3%, and they've increased their payout for 48 years in a row. So once again, that dividend is rather reliable. They are a consumer staples company that sells Pepsi, but they also control Gatorade, Doritos, Cheetos, Lay's, Mountain Dew, and a slew of other multi-billion-dollar brands, holding a solid firm once more. These are just a few stocks to consider when started with dividend investing. Before you acquire anything, you should make sure you understand the stocks those who do not comprehend the situation usually use in a long run. So the idea is to earn $1,000 per month in dividends while remaining entirely passive. How much money will we need to invest in total to achieve this? It is not easy. You must put in the effort and time. So let me show you how much money you need to invest to obtain $1,000 in dividends per month. Let's say our typical dividend yields roughly 3% per year. That indicates that if we invest $100,000, we will receive $3,000 every year in return. So in order to earn a total of $12,000 every year, we'd need to invest $400,000 or $1,000 per month. Also keep in mind that many equities only pay dividends every quarter, so that could only be $3,000 every 3 months. Many individuals would look at this figure and assume it's impossible to invest $400,000 in the stock market. But gentlemen, it's achievable once more. Consider the snowball effect. When you first start a snowball, it's small, but once it starts rolling, it grows quite large. This is why Warren Buffett's famous book, The Snowball Effect, was named after him to demonstrate the same premise. Most people won't even bother knowing about it, let alone trying it. But those who do will wind up making $1,000 each month in passive income. However, you can't just be a good, average, or bad investor. You should set a goal of becoming a high-quality investor, able to identify companies that are at the top of their game and will remain so in 3, 5, and 10 years. Now, you must be able to select firms that pay consistent dividends, have a solid history, and most importantly, have a bright dividend future. You want companies with strong CEOs, such as Steve Jobs in 1980s or Jeff Bezos today. As an investor, you must conduct a thorough study and ensure that you comprehend all of the many components. But you have to start somewhere, and sometimes that means being a lousy investor. Stop playing video games and stop studying about investments. Stop playing video games and start studying about investment instead. Stop squandering money on parties and invest it in dividend equities instead. That's how you start building a dividend portfolio and eventually earn thousands of dollars in passive income each month. So what dividend investment methods have you learned from our discussion? Which one is your favorite? Please let me know in the comment section below. And if you like this video, please press the thumbs up, turn on the notification bell, and subscribe to our channel for more. Thank you for taking the time to watch. Stay tuned for our next video.